So the war has caused inflation to soar in Russia, making it more expensive to buy goods and services for the average Russian. It has disrupted trade and transportation, which is making it difficult for businesses to operate. And these problems have led to a sharp decline in the value of the ruble. In just a few months, the ruble has lost more than half of its value against the dollar. And this is making it more expensive for Russians to buy imported goods, and it also makes it harder for them to save money. So as you can see from this chart, the ruble has hit a new annual low. This means that the ruble is actually worth less than a penny now. Other than the brief 2 or so day crash when the war started, this is the lowest the ruble has been since Putin took over 24 years ago. So what does this mean for the average Russian? Well, a Russian that makes about 2 million rubles per year, which is a little above the average middle-class wage in Russia, in January of 2022 means that they earned the equivalent to about $26,300. That was just before the war started. Today, that 2 million ruble wage makes $19,674. That is a more than $6,000 drop in the ability of the average Russian to purchase goods and services from any country that is not Russia. But it also affects internal Russian economic operations. The reality is what would you say if your purchasing power dropped by 1/4 of your total wage due to a war your government is foolishly fighting? This means that Russia can't purchase as many Chinese goods. This also means that black market goods they still seek, such as iPhones, computer chips, etc., all eat a larger percentage of the average Russian's income to buy. And this includes imported foods as well. When a country's currency is devalued, it means its value relative to other currencies decreases. This means that imports become more expensive in terms of the devalued currency. Since many countries rely on imports for various goods and raw materials, higher import costs translate into higher prices for goods in the domestic market. The increase in import costs affects the production costs of domestic goods that use imported inputs. As these costs rise, producers often pass on these higher costs to consumers in the form of higher prices. This is known as cost-push inflation, where rising production costs lead to a general increase in prices across the economy. This makes it harder for Russians to save money and invest. Speaking of investments, the Moscow exchange has lost 25% of its value since the war started. A lot of that can be explained by the initial crash that took place at the beginning of last year with the onset of the war, but they haven't regained that value back. It is 25% lower now than it was in early 2022. So when you think of this, think of the fact that not only are Russian investments dropping, their wages are now have a purchasing power that is 1/3 lower than what they were at the beginning of the war. So Russia has conceded that inflation is roughly 11.1%. Many experts are saying it's quite a bit higher given the currency exchange rate issues. But regardless, an inflation rate such as this leads to a drop in investment. It leads to a drop in savings. And as we're seeing retirement funds evaporate with the Moscow exchange dropping, people have a real problem with their futures here. Not only their futures, but buying goods and services that drive the economy now, up to and including struggling to buy food. And I speak about food because Russian supermarkets are now using installment systems for basic staples. As you can see in the pricing here, you can pay 143 rubles for full price of bread, or you can put it on credit in 12 ruble installments for 12 months. Access to credit in Russia is difficult for the average Russian due to sanctions, so this inadvertently helps upper middle class and above Russians. The reason for this need is because a loaf of bread just 2 years ago cost 68 rubles in Russia. For reference, the U.S. average loaf of bread costs $1.98 per pound, according to the Federal Reserve. 2 years ago, it was $1.58, so we have seen a 20% increase in bread costs here in the United States, which isn't great. But Russia has seen a 210% rise in the cost of a loaf of bread. So the Kremlin is pointing at its central bank, saying that they have a weak monetary policy. Of course, the Kremlin will never discuss the real reasons, such as the war and the sanctions. Even so, this is a rare sign of public discord among Moscow's governing institutions since the invasion of Ukraine began. The central bank has actually hiked interest rates to 8.5% from 7.5%, which is still lower than the 20% they were at early last year. The reality is no one wants to buy the ruble because no one needs the ruble. Due to sanctions, very few are buying Russia. They don't need oil. Europe, as one of Russia's major customers, has shut that tap off. BRICS has distanced themselves from Russia, and The problem for Putin is he can't admit the trade sanctions are causing this, because that would be admitting the trade sanctions are actually causing harm and biting into the Russian economy, when he said they aren't, when he said that Russia is resilient. I mean, nothing says that you have a strong economy like bouncing interest rates around like a sixth grader's GPA, or a 200% increase in the cost of bread, or your currency crashing on the global scale. Rapid ruble devaluation is a big reason why Russians turned out to vote for Putin in the late 90s. He used it to win his first election by saying he would put the economy on the right track and deliver stability for Russians. That is definitely no longer the case, so we have to wonder, is history going to repeat itself here?